We have to start our second chapter, that is money laundering. Small chapter about money laundering. Money laundering is offense, obviously, and what are our accountants' responsibilities and what is ethical guidance. Okay. What is the definition of the money laundering? Money laundering is the process by which criminals attempt to conceal the true origin and how this money was earned, the true origin or ownership of the proceeds generated by illegal means, allowing them to maintain control over the proceeds and ultimately providing a legitimate cover for their source of income. Money laundering is the process by which the criminals attempt to conceal the true origin and ownership of the proceeds, okay, which are obviously generated by illegal means. So they can maintain control of the proceeds and ultimately it can provide a legitimate cover for their sources of income. Money laundering involves three main stages. First is the placement. Okay, first stage is the placement, where cash is obtained through criminal activity and is first placed into the financial system. First placement, then layering, where the illegal cash is disguised by passing it through the complex transaction, making it difficult to trace. Okay, then we put some layers over that money. We invest it somewhere, so it cannot be traced easily. Okay, invested 3-4 times, so it cannot be traced easily. First is the placement, then the layering, then the integration, where the illegally obtained funds are moved back into the legitimate economy and is now clean, which what we call turning black money into white money. Okay, first is the placement, when it is put in the financial systems, then layering, we invested, we move it through the different systems to make it complex, then we integrate it, and we just now finally convert the black into white money. What are the money laundering offenses? Acquiring, possession, or use of criminal property. Okay. When you acquire, possess, or use of the criminal property, so these are money laundering offenses. You conceal or disguise or transfer criminal property or remove it from the country. You conceal it, you disguise it, or transfer criminal property or removing it from the country. Entering into or becoming involved in an arrangement which is known or suspected to facilitate the acquisition, retention, use, or control of criminal property by or on behalf of another person. Okay, you enter into that agreement or you are involved in an arrangement which is only suspected that you can facilitate the acquisition, retention of any criminal property. If your failure to report the knowledge or suspension of the money laundering, this is also an offense. If you know and you do not report it, so this is also a money laundering offense. Then the tipping off. Okay, what tipping off means? Means to carry out any action that may make suspected money launderers aware that they are under investigation or producing the outcome of the investigation. Okay, tipping off means you just, by your actions, you just let the money launderers know that you are being suspected. Okay, no tipping off offense is committed when inquiries are made of a client regarding something that properly falls within the normal scope of the engagement or business relationship, or if an employee attempts to dissuade the client from conduct amounting to an offense. Okay, during the audit, if you know that there is a money laundering going on in the company and you let the company know that you are just about to report to the authorities, so that is called tipping off. Okay, failure to disclose knowledge or suspension of money laundering may include if you know but you do not let the authorities know. What this can include? Failure by an individual in the regulated sector to inform the Financial Intelligence Unit or the firm's MLRO, Money Laundering Reporting Officer, as soon as practicable of knowledge or suspension that another person engaged in money laundering or failure by the MLRO in the regulated sector to make the required report to the FIU as soon as practicable if an internal report leads them to know the suspect that the person engaged in money laundering. Okay. How it can be failure for the internal auditor? First is individual has not reported the FIU or the money laundering reporting officer, or the money laundering reporting officer did not inform the FIU if he knows that money laundering is going on. If a business fails to meet its obligations under the regulations, they can face civil penalties, they can face criminal sections, it can be imposed on the business. Okay. Criminal property is property that is arising from the criminal conduct. Okay, criminal property is a property that is arising from the criminal conduct. Okay, property acquired by theft, you have thefted. Okay, proceeds of tax evasion, you have evaded the tax, and by this money you have done this, you have acquired a property. By bribery or corruption or safe costs arising from a criminal failure to comply with a regulatory environment, you have not complied with the regulatory environment and saved costs from it, and you have acquired a criminal property. Now look at the scenarios. Whistle preparing or auditing accounts, you realize when you are just preparing the accounts, you realize that a client has incorrectly claimed value-added tax or other national recoverable taxes on the purchase of a motor car. You point this out to the client and propose an adjustment to the financial statement to provide an additional tax that is due. You also advise the client that they must declare this to the tax authorities. However, the client tells you that they have just had an inspection by the tax authority that did not reveal the error and they do not wish to do anything further. Okay. The scenario is clear that you just were auditing and you find out that they have not paid tax. And when you told them, so they told that our audit is done by the tax authorities and they do not get to know this. So we are not doing anything else now. Then a company knowingly receives payment for one invoice twice. Okay, payment has been duplicated. The sole director has told the accounts department to ignore negative balance when they issue statement of account to customer, hoping that they fail to notice. Errors and mistakes of this type illustrated above may not constitute criminal conduct. Okay, this is not a criminal conduct, provided they are corrected. However, in both cases, there appears to be intention to gain a permanent benefit from others' mistakes or to avoid a legal liability. As such, each of these cases would result in the accountant knowing or suspecting that a client is involved in money laundering. Okay, this could lead you that now that the client, if the client is doing things like that, so he could be involved in the money laundering as well, because he is doing wrong things for the money. Okay, so this could lead to your suspect. Now, anti-money laundering program. The main legislation and the requirements below relate to the money laundering regulatory regime in the UK. These principles, however, are appropriate to an international basis. The regulation imposes certain obligations on financial service businesses, which are designed to assist in detecting money laundering and preventing the financial service information being used for money laundering purpose. At a minimum, anti-money laundering programs should incorporate, okay, how the anti-money laundering, what our anti-money laundering program should include. Money laundering and terrorist financing risk assessment. Okay, terrorist financing risk assessment and money laundering risk assessment. Then implementation of system, policy, control, and procedures that effectively manage the risk that the firm has exposed to in relation to the money laundering activities and ensure compliance with the legislation. Okay, there should be obviously the system, policies, controls in which you can effectively manage the money laundering activities. Compliance with customer due diligence. Okay, there should be customer due diligence But how you, who are your business partners, who you're working with, enhance due diligence and simplify due diligence requirements. Okay, due diligence should be there, and there should be records. If the company does not have records, so it means that it is something wrong with that. Okay, data protection system, they should have policies, they should have procedures. In the UK, these measures are covered by money laundering, terrorist financing, and terror transfer of funds, information on the payer, regulation 2017, money laundering 2017, with reporting to the NCA, National Crime Agency. Now, we talk about this money laundering and financing risk assessment. Okay, a written risk assessment must be carried out to identify and assess the risk of money laundering. The risk assessment must take into account information provided by the supervisory authority on risk factors in the sectors. The following risk factors must also be taken into account. What are the risk factors? The firm customers, they are a risk. The countries in which they are operating, okay, where the money laundering is going on more and more in that countries. So you should be careful. The firm's product or services. What are the products and services of the company? The firm's transactions, the firm's delivery channels. Okay, how they are dealing. They are dealing only in cash, not bank involved, so it is risky. The risk assessment should be used to the risk when you assess the risk. So now you have to develop the policies, procedure, and controls to mitigate that risk. You have to apply a risk-based approach in detecting and preventing money laundering. Okay, there should be risk-based approach, not like this that when money laundering is done, then you are implementing a process. Okay, you have to identify the risk and you have to work for it. Okay, you have to keep on thinking, and if you assess any risk, so you have to tailor your money laundering process. Okay, these fraud, the types of fraud and the way of fraud keep on changing, so you have to have policies in which you can cater that. So you have to change your policies as well. Now, the internal controls. The firm must establish and maintain written policies, controls, and procedures to effectively manage and mitigate the money laundering and terrorist financing risk activities, which you identify in the risk assessment process. Okay, these must be proportionate to the size and nature of the business. Obviously, you have to look at the size of the company, then you have to apply the policies. If the company is small, small policies are required. If the company is big, you have to apply a big controls there. Okay, what are the officer responsible for compliance? They should appoint a money laundering compliance principal. Okay, money laundering compliance principal, and this person must be on the board of directors. Okay, and or a member of the senior management. Sole practitioner with no employees are exempt from this requirement. Okay, sole practitioners with no employees, they are exempt, but you have to appoint a money laundering compliance principal. And firm also must appoint a nominated officer, which is MLRO, money laundering reporting officer, so he can receive the internal suspicious activity reports and assess whether action should be taken or not. It should be reported to the regulatory body or not. Okay, MLRO and MLCP may be the same person. Okay, and MLRO is sufficiently senior. So he will be giving a senior position because he is representing in the board. Okay, then what are the responsibilities of the employees? Firm must assess the skills, knowledge, conduct, and integrity of the employees involved in the identification, prevention, or detection of the money laundering, both before and during the course of their appointment. Staff training is very important on an ongoing basis to handle the transactions relating to the money laundering. Okay, how to tip, how not to tip off, how not to blow the whistle wrongly. So they should be provided proper training. Then independent audit function. Firm must establish an independent audit function to assess the adequacy and effectiveness of the anti-money laundering process controls. Sole practitioners with no employees are exempt, obviously. They do not need that much. The government is there to control them. The customer due diligence. This is important because you will be receiving the money from your customer. Okay, and money laundering comes first of all there when the money is involved. Accountants are required to establish that new clients are who they claim to be by obtaining satisfactory evidence of identity from the client. Customer due diligence. And know your customer procedures. Who your customer is. Okay, how to due diligence of the customer. You have to identify the client, know the client, verifying their identity. Okay, by obtaining documents and other informations, and identify the beneficial owner. So the ownership and control structure can be understood. Who is the beneficial owner? He is the agent or he is directly the owner, in which whom we are talking with. Okay. Gathering information. Who is the client? Who owns or controls them? What do they do? What are their sources of the funds? Can you describe their activities? What activities they are involved in? Okay, they are taking something from you, how they're using it. Okay, what will you be doing for them? And what is the legal structure of the company? Okay, basic identification procedures. If a person is an individual, you can ask for his driving license, passport, recent utility bill. Okay, for businesses, you can ask for certificate of information, incorporation, list of registered members and directors, certificate of registered address, their NTN number, their national tax registration number, and if they are a trust, so you can ask for the nature and purpose of the trust, original source of funding, how they generate funds, and who are their trustees, controllers, and beneficiaries. And there are two types of due diligence: enhanced and simplified. Enhanced due diligence for high risk clients. Enhanced due diligence must be carried out. Enhanced due diligence procedures include examining the background and purpose of the transaction. Okay, you look at the background of the transaction, the purpose of the transaction. Okay, and increase monitoring of the business relationship. You have to increase the monitoring of the business relationship. Simplified for clients presenting a lower risk of the money laundering. Simplified due diligence may be carried out. Okay, it may be helpful to the auditor to explain the client the reason for requiring evidence of the identity. This can be achieved by including this matter in the engagement letter. You can write in your engagement letter we would be requiring these documents if a new customer is there. Okay. Now we have an example of engagement letter money laundering clauses. In accordance with the proceeds of the Crime Act 2002 and money laundering regulation, you agree to waive your right to confidentiality to the extent of any report made, document provided, or information disclosed to the National Crime Agency. You also acknowledge that we are required to report directly to the NCA without prior reference to you and your representatives if during the course or entering an assignment the person entering the role of money laundering reporting officer becomes suspicious of money laundering. Okay, these are all included in the engagement letter. Okay. Enhance record keeping. It is very important that accountants keep comprehensive records to how to show that they have complied with money laundering regulations and protect themselves. Okay, you must have records there. Records must be kept of all customer due diligence completed, copies of their evidence, transaction with each client, internal external money laundering, suspicious activity reports. Okay, you must have these records. When there is an investigation, this could help you. Reporting procedures, we know that it is a criminal offense not to report the knowledge or suspicion of a money laundering. Okay, a person in the organization is nominated to receive disclosures, usually the MLRO. Anyone in the organization to whom information comes in the course of the relevant business as a result, which they suspect, okay, they must disclose it to the money laundering reporting office. If any person get to know something that something is going on wrong, so you have to report to the MLRO. Okay, whenever the disclosure is made to the MLRO, they must consider it in the light of any relevant information. Okay, which is available to the organization and determine it gives rise to suspicion. So MLRO will look at it that this must be acted on or not. Okay, if MLRO, where the MLRO does so determine the information must be disclosed to the relevant authorities, the FIU, NCA in the UK. Okay, MLRO completes a standard form. He must fill a form. There is a standard form. What should include? Death suspect name, address, date of birth, nationality, identification, nature of the activities giving rising to the suspicion, and any other information that may be relevant. Monitoring of the policy and procedures. MLRO and appropriate senior management should together monitor the effectiveness of the policies, procedures, and processes. Improvements can be made. Okay. Senior management should encourage relevant employees to provide feedback on the policies. When the changes are made, policies, procedure, and processes, they should be properly communicated. The effectiveness of the money laundering system must be independently reviewed again and again. Okay, senior management responsible for compliance and the MLRO should monitor publicly available information on best practice. You should look at the best practice and try to apply in the company as well. Potentially suspicious transactions. Unusually large cash deposits. It means that is suspicious. Okay, they are dealing in cash, so they do not want bank to know about their transactions. So this is risky. Then frequent exchanges of cash into other currencies. Okay, they are frequently exchanging the currency, so it is risky. And overseas business arrangement with no clear business purpose. Okay, an overseas business arrangement with no clear business purpose. So this is also suspicious. These are examples. It could be more as well. Ethical guidance on money laundering. The accountant's professional duty of confidentiality in relation to their client business and duty to report suspicion of the money laundering to the appropriate authorities as required by law. Okay, there's a conflict between, obviously, you do not have to let the information out about the client, but you have to report the suspicious activity as well. Okay, so there should be clear that it is also the professional duty of the accountant to let the authorities know if there is something going on wrong in the company. Okay. Disclosure in bad faith or without reasonable grounds would possibly lead to accountant being sued. Financial Action Task Force, okay, FATF, is an international body that promotes policies globally to combat money laundering and terrorist financing. FATF issued recommendations to combat money laundering. Okay, recommendations, international cooperation between the companies, between the countries, implement relevant international conventions on money laundering, criminalize money laundering, and enable authorities to confiscate proceeds of. You should have proper laws to criminalize the money laundering, implement a customer due diligence, establish a financial intelligence unit, FIU. UK FIU is run by the National Crime Agency. Three principal areas they focus on: setting standards aimed at combating money laundering and terrorist financing, evaluating the degree to which countries have implemented measures that meet those standards. They provide lists. This country in the gray list, this is in a blue list. Okay, they evaluate the degree to which countries have implemented measures that meet these standards, and identify and studying money laundering and terrorist financing techniques. Okay. Chapter is finished. Money laundering. Financial Task Force on Money Laundering, FATF. Their legislations: Proceeds of Crime Act, money laundering regulations, money laundering, tipping off, not setting up procedures, not complying with the procedure, ethical conflict with the confidentiality, risk assessment, system policies, customer due diligence, enhanced record keeping. Okay, this chapter is finished. Now the second chapter is Code of Ethics and Conduct.